Hello traders, the title of the video is Elliott wave a trader takes his internal wave count onto 3-minute chart. So I'm on a 3-minute chart and we're going to talk about internal wave counts. On the Friday 16th of August, all right, we were counting wave, talking about speculative Elliott wave count. All right. Very, very important, speculative Elliott wave count. We were calling this one first wave, second wave, and third wave right there, followed by the fourth wave. And we were in the fifth wave when the market was closed on Friday, the 16th of August. So we were somewhere here calling this, we were expecting the fifth wave to go up there. And just before the market was about to close, we see this move down and I quickly close that trade. So on Monday, after the weekend, 19th of August, we see this rush up, which is an extension of that expected fifth wave that stopped prematurely due to the closing time of the market for the weekend. So this is an extension of that fifth wave. What I say to traders when we are talking about speculative Elliott wave count, one should not expect a continuation from one day to the next day, from today to the next day, all right? But what I'm looking at today, there is a continuation here. It's a flat correction. So this 1, 2, 3, 4, 5 speculative wave count, not the normal Elliott wave count, but speculative Elliott wave count. Stop right there, all right? If you want to understand more what I meant by speculative Elliott wave count, go to www.24elliottwaves.com. Digit 2, digit 4, Elliottwaves in plural.com, all right? So now we see here, so that's yesterday, Monday, all right? Monday, so 19th, so this here, 19th of August, all right? That's the session here, stop there, all right? So on Monday, what we got there, what's that? So, okay. Normally, we don't have a continuation, but this looks like a continuation because it becomes clear now. You can see that this is the A manual wave of a flat correction. Going to change the color of right there. That's the A manual wave of a flat correction. And if you agree with me, feel free to disagree, by the way. That's the B manual wave of a flat correction. All right. So this week we have what we call the G7 summit at a place called Biarritz in France from the 24th of August to the 26th. That G7 summit very often will affect the stock market. So think of it, a hedge funds, all right, big market players will not leave their position exposed to decisions that could be made during that summit, all right? So they will be trimming their portfolio, adjusting their portfolio before that major event of the G7 summit. So if you are thinking that the market is a little bit funny this week, it's because of the G7. So you have to remember, if you're a financial market trader, you want to pay attention to G20 summit, G7 summit. What do they have? They have G5, blah, blah, blah. So all those summit that regrouping the leaders of the world will affect the financial market one way or another. If you are trading forex, you will also notice that. If you're trading stock, you want to pay attention to that. That's why we say to traders, don't be the purest technical trader. Pay attention to the news, the economy news, okay, even geopolitical news, all right, can affect the stock market, all right. So because of that, you see this trending first. So this way we see a correction in the shape of a flat correction. So if you agree, that's the B manual wave of our flat correction. We are now in what we call the C manual wave. All right. Talking about the internal waves, all right, because we are talking about internal wave. All right. So this is, so we say to traders, the multi-wave of any Elliott wave can be extended. So for the flat correction, The multi-wave, the first multi-wave is A, and the last multi-wave is C. All right. So our C minor wave, hopefully, it has ended here. It can gap down here tomorrow. It can gap down to this point here, this level of 25849. It can gap down. So I'm going to put the cautiously. I put it a little bit below, and I put also a question mark next to that C there. And as I told you before, any multi-wave can be subdivided into 5 minor waves. Very important. Any multi-wave or any wave can be also extended. All right. So the A minor wave or a flat correction, the C minor wave of a flat correction can also be extended. All right. If you are talking about a zigzag pattern, which is ABC pattern, the A and the C can also be extended. Talking about motive wave, motor. So I'm going to put a question mark to that. With your permission, of course. You can say, Joe, you don't need my permission. I need your permission sometimes, okay? Well, this to get your attention a bit, so to check whether you are following what I'm saying, all right? Okay, so we put a bit of question mark on it there. Is that the end of it? That's what I meant by that question mark there. Or is it going to pop down here? So this is a very important. I'm going to mention that in a minute. You see my advanced trading technique here. Okay. Normal price move or diagonal price move, a vertical price move, what? Retracement to the opposite diagonal. Can you see that? So I projected the normal price move horizontally using this vector, horizontal vector. Have you done math before? All right, now you think you run away from math. Here it is catching up with you again. So we project it vertical, horizontal, which means we draw it parallel because the price went horizontal here. Normally that vertical move should have happened somewhere here. But because of the weekend, you see, it went horizontal. And then so we project that line here. So we have our normal price progression, which is a diagonal price move, followed by a vertical move. Very often, it's what we call proprietary trading tool at www.stochastic-magnet. So now, retracement to the opposite diagonal. So if you start going down from the top, the first target is the 50% Fibonacci retracement of the vertical price move, which is here. Can you see 50%? Can you see 50 there? Near that green line there, that's the 50%. But now it's very interesting. Normally, the opposite diagonal will stay below, all right, the starting point of the vertical price move. But this time it's above it. It's the starting point of the vertical. You see, this is the opposite. The normal diagonal is this one. All right. I talk about it. Just YouTube search the price, something to do with proprietary trading tool, diagonal price move, proprietary trading, and you will see a video about that. Okay. Okay. So so we have now intersection between the 50% Fibonacci retracement level, which is the midpoint target if it's coming down because a vertical price move. Market principle is a distortion to a certain degree. The normal market pattern are rising, meaning that diagonal rising channel, okay, and or diagonal declining channel. And a price move in a vertical channel is a distortion to a certain degree. There is a high chance, not guaranteed, high chance that the price may correct that distortion. And if you start correcting it, sometimes you stop at 38.2% Fibonacci retracement of the vertical price move. Sometimes in normal, quite often, all right? It will ignore the 38.2% level. Those are 38.2% traders here. But they probably ignore it and will come to this 50% Fibonacci retracement level. If you fail there, you come down to the starting point of the vertical price move. And if you fail there, and the opposite diagonal is below, all right, is below the starting point of the vertical price move, then the price will go to the opposite diagonal below the starting point of the vertical price move. This is a very interesting scenario because now the opposite diagonal is above the starting point of the vertical price move. So now let's continue with our internal wave count, all right? So just in a bracket, all right? I am not deviating from our topic today, which is internal wave count on the 3-minute time frame. Okay? All right. So where is this now? So this is what we are calling C. So we want to count the internal wave of the C. Now, the C minor wave in normal conditions should be subdivided into 5 distinctive ways. Can be divided. It's 5 distinctive ways. Agree or disagree? You agree, okay? That's a Elliott wave principle, okay? Now we know that the first, the third, and a fifth minor wave of any motive wave can also be extended. So while we are looking, you see this section here? This is an extension of the fifth minor wave of the C wave going on here. It's not easy though, all right? I'm trying to look where they are now. Not very clear, all right? It looks to me that this is the first. Are you getting it now? So let's count them, okay? So what's the first minor wave of the after C wave? So we can put it here. Finding those hidden. Why are they hidden, man? They should be in the open, isn't it? Why are they hidden? All right, I'm running out of color now. I'll use blue, okay? Here it is. First minor wave of the C wave of the flat correction. Agree or disagree? Of course you disagree. Okay, that's fine. All right, now. Okay, stay with me, please. Let me finish first before you start banging the table, my friend. All right. Trader always disagree. That's normal, okay? Don't worry about it. So, second minor wave on a 3-minute time frame. Can you believe that? I'm not wearing glasses though, just to let you know. All right, I'm not wearing glasses, so stay with me. Third minor wave. And what have I said? He formed a double bottom chart pattern. What do we do? To avoid confusion when you are counting wave, you can cover any double top or double bottom. So when you do that, it means that instead of you can that end of that third minor wave can be here or here. Doesn't matter. So it's like a hole. So we can connect these 2 dots here. That will allow you to avoid confusion. So where is the fourth minor wave of that flat correction, George? Here it comes, my friend. It's not easy, this one. It's not easy, all right? So don't think this one. This is not easy, okay? And where is this fifth minor wave of that C wave of the flat correction? Again here, try to get into this habit. Anytime you call something the last leg or the last segment or the last wave of a pattern, try to get into the habit of putting a question mark on it. So, for instance, you count here 1, 2, 3, 4, 5. Don't just leave it 5 like this. Put a question mark on it because it can be extended, or it may be, or that thing that you are calling fifth wave may just be a portion of a prior extension that you are not aware of at that stage because we are counting wave one step at a time. That's why I do that all the time. So like now I'm saying, okay, this is, by doing so, it's like you are not going ahead of the price, but you are a little bit cautious. So like this now, is that the fifth way? Is that the end of the fifth way of that C way? And then for yourself, all right, you are allowed to put a question mark on it. Haven't I say question mark? Yes. Okay. No exclamation mark. Question mark. That's it. Any last segment of a pattern, try to put a question mark on it. That's it. So those are the internal wave of the C minor wave of the flat correction that is happening here. So 1, 2, 3, 4, phi, and that's a fifth minor wave of the flag correction of the C. That's a fifth minor wave of the C minor wave of the bigger flag correction is subdivided also into phi because it can be extended. And in this case, it has been extended. Is it too much for you now? All right, let's count it. All right, should I put it on the chart? Okay. You need to count it? Okay, so here they are. That's one. This move down. One. Okay, what I will do, I will draw them. Try to hate it when I draw the line, but I'll draw it and then remove them. Okay. One. First minor wave, or that fifth minor wave of the C minor wave of the flag correction. Two. You want a 1, 2, 3, hit that declining channel. All right? Agree or disagree? Of course you disagree. Okay, good. All right. Now, where is the 3? You see how he went down big time a little bit? You see, sharp move down. But some traders will disagree and say, George, well. I'll put it here like this, okay? This is myself. Some trader may say here. So what's the big difference then? So they will say price going down to form the fourth. That's not good. The fourth should be going up, isn't it? So that's why I don't want to put it here. That way it looks like it goes down like this. So that's why I prefer to put it here. Because it must be a bounce up. All right? Just, you see, it's just about a mindset, okay? So that's 1, 2, 3 here. So now it is 4. Or is it already 5th? 1, 2, 3, 4. And now they bounce, they crash it down to close the market. All right? So we have a very gorgeous flat correction that happened to be a continuation of what has happened Friday and Monday. Our speculative recount has exhibited, okay, a continuation which is not frequent. Maybe because of the G7 summit in Biarritz in France from the 24th to the 26th of August 2019 in France. That's why the market is correcting itself at this junction. And we see that gorgeous flat correction. That's the A minor wave of a flat correction. That's the B minor wave of the flat correction. Now you can see that this is quite deep retracement, isn't it? So you can see, quite deep, isn't it? Come to 50% Fibonacci retracement level. If it gap down tomorrow, that will bring it to 258, all right, 49. All right. So understand. So this is about internal wave. Okay. So we see the internal wave of the flat correction, and we also notice that the C minor wave of the flat correction itself, the C minor wave. So from here all the way here, of the C minor wave of the flat correction itself has been subdivided into 5 minor waves. First minor wave, second minor wave, third minor wave, fourth minor wave, and the 5th minor wave of the C minor wave of the flat correction. Not only that, the 5th minor wave of the C minor wave of the flat correction itself has been subdivided into 5 minor waves. 1, 2, 3, 4, 5. Now the question is this the end of the 5th minor wave of the C minor wave of the flat correction? And also, is this the end of the C minor wave of the flat correction? We will see tomorrow. Will the Dow Jones gap down tomorrow to this point, 25849, or will it find a support at 25966? At this point in time, talking about speculative Elliott count, what I will say to those greedy, Dow Jones indices traders, priority to bullish signal above speculative trading. Yeah, this is not a swing trading, this is not day trading. Speculative day trading, all right, priority to, it's a short-term trading on that day, all right, priority to bullish signal above 25966 and priority to bearish signal below. Talking about speculative trade on the 3-minute time frame. All right, that's what I'm saying. All right, really find a support and gap up because of the end of the C of minor wave or the flat correction. We will see. how they bought it at the end of the market. Look at the tail here. It looks like some people bought it just before the market exploded. So anything is possible tomorrow. Can gap up, can gap down. We will see. But when we have a G7, the market is a little bit funny. Usually people are all over the place. All right, they are very, very careful. So because of the past and the experience that I got, if you are very bullish, be careful. If you are very bullish, be very, very cautious, okay? That's what I've said to you. All you need to do is take it one step at a time. You say, Joe, you like that phrase so much. Yes, I do. Okay? So, all in all, apart from the internal wave, remember everything that I said also about, all right, the proprietary 32 diagonal price move followed by a vertical price move. There is a high standard prior where it tests the opposite diagram. It did yesterday. Here it is. All right. Now, if you start coming down here, apart from the 38.2% level, the first target, midpoint target, 50% Fibonacci retracement of the vertical price move. If the vertical price move is accepted, I'm choosing my word very carefully, is accepted as a distortion to a certain degree, the price can come down to the starting point of the vertical price move. Will it do that? We will see. Normally, the opposite diagonal is often below the starting point of the vertical price move. In this case, this is not the case here. But if it was, after the price dip below the starting point of the vertical price move, it will seek SWEK. It will seek the opposite diagonal that is usually below it right there. All right. Am I talking too much? Okay. So if you have any question, suggestion, or blah, 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 let us know in the comment section. And in due course, I will be recording another video to answer your specific question. All right. So all in all, this is it. Internal wave, we can see here, it's not always possible to see all the internal wave. And sometimes it's quite easy to see them. This one is not very easy. But at the end of the day, you are getting a message now, all right, even on the 3-minute time frame, here it is. Are we going to, now the question is, are we going to have a continuation of this speculative area will count? Because this is a speculative area will count. It may not continue. So we can say 1, 2, with a question mark on that 2, wave of a higher degree, expecting a speculative third wave. Talking about speculative area will count for new traders, one who understand the area wave principle, decide to use the area wave principle in a speculative fashion to make excellent trading decisions without giving too much importance to the area wave rules. This is about, okay, speculative area wave count. So don't post a comment and say, oh, we see here violation of area wave rule. I'll turn around and tell you that this is a speculative area wave count for scalping purposes, scalping the Dow Jones on a 3-minute time frame using the area wave principle. One of my favorite area wave patterns is what? The flat correction. You'll see the flat correction, this is one example here, quite often on the 3-minute time frame, on the 15-minute time frame, on the what? 4-hour time frame, all right, on the weekly chart, on the quarterly chart, if you're a position trader, on the quarterly chart sometimes, very often, all right? So, all in all, if you want to learn more about mastering the flat correction, all right, go to check out our playlist on YouTube, Flat Correction Trading by 24 Elliott Waves, or visit our website www.24elliottwaves.com and watch videos, read about the flat correction. We have the expanded flat correction, the classic flat correction, the running flat correction. It does not have a leg. We have a flat correction that we call a running flat correction. Can you believe that? Well, this is it. Okay, so If this video has been truly useful to you, if it has opened your eyes widely, okay, and you say this is a useful video for you, let us know how. Please give us the thumbs up, all right? However, if you say, oh, you try your best, you did everything, you nearly get me there, I nearly mark it up, I'm not impressed at all, I'll be sure to mark it down, okay? However, if you think that this is an essential tutorial, well, feel free to share with your friend on the social media, all right? Subscribe to our YouTube channel. Our YouTube channel is 24 Idiot Ways in plural. Be sure to click on the notification bell. So when we send a notification to traders, according to the Google YouTube Analytics, only 10% of our subscribers did bother to click on the notification bell. It's below in the description section there. There's a bell icon there. You must click on it if you subscribe to our channel. So anytime I hit the publish button, you will be the first person to watch it. Because sometimes I post video and traders want to watch it very fast. So you want to be the first person to watch it. So it's not a spam at all. It's just telling you that a video has been posted on YouTube. I subscribe to more than 100 channels on YouTube, and I receive many notifications every day. So I look at them and say, all right, I'm interested in this one, and I watch it. All right. If you are not interested, okay, you don't have time, or you watch it another time. That's all. All right. So click on the notification bell. It is free. It's just your index finger that you need to put on the cursor and then click on it, and that's it. You are in. It's there. Okay, I don't know. It doesn't cost anything. It's a useful bell. I click on it all the time I subscribe to the channel. I click on the notification bell. All right, let me know when you post a video. All right? So if you want us to talk about another topic, okay, put in the comment section. I always take note. Trader ask me questions. I note them all down, and then one day here I am talking about it. Okay, so I promised Trader that at the beginning of 2019, I did promise traders that I will be recording a live tutorial. We are now in August, and I will start doing it, okay? So I do pay attention to what I'm saying to traders. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott wave trader. Take his internal wave count on to 3-minute charts. And my favorite stock index is the Dow Jones. And when I started trading first, I always trade on a 3-minute time frame using the stochastic MACD. My stochastic setting those days was the stochastic 633. And I was using MACD 832.9 if my recollection is correct. So that's why I have a website that we call Stochastic MACD. All right, so this is just, okay. Thank you for watching, and I will speak to you soon. Happy trading to you all.